Meta just posted this massive earnings beat, like 56% over estimates. But honestly, over $8 billion of that is just a government tech's hallucination. So welcome to Earnings Unscripted. It is April 29th, 2026, and we are unpacking Q1 for Meta, ticker META. Muro, please tell me I am not crazy for thinking this is mostly an accounting trick.
You are not crazy. It is actually pretty wild to see a headline EPS of $10.44 when a huge chunk of that is literally just reversing a prior tax penalty. Actually, quick thing before we dig in, this is just our personal opinion, definitely not financial advice, so do not trade your retirement on Mark Zuckerberg's tax rate. But yeah, if you strip out that Treasury benefit, the EPS drops back to $7.31, which is still solid, but it is not the miracle the headline suggests.
Right, exactly. And clearly the market saw right through it. The stock was basically flat during the regular session today, closed around 669, but then in after hours, it just fell off a cliff. It gapped down hard and finally stabilized around 622. So they lost over 7% immediately. I mean, top line revenue was $56.31 billion, up 33% year over year. Operating margins held at 41%. What exactly is Wall Street panicking over?
I would say the infrastructure bill is what broke the spell. The CapEx guidance is, well, it's terrifying. They just raised the full year target by $10 billion, so the upper bound is now $145 billion. That is basically a blank check for data centers. And Zuckerberg explicitly said they're doing layoffs next month just to fund this AI scale out. So they're actively trading payroll for silicon.
Wow. Whew. Firing your staff to buy more GPUs. That's pretty dark, even for tech. And it's kind of wild considering their core product is still about human connection. They did mention today that 500 million people on Facebook and Instagram are now watching AI translated and dubbed videos every single week, which that's amazing scale, but their daily active people actually shrink.
Yeah, DAP went down by roughly 20 million users, settling at 3.56 billion. And management completely blamed geopolitics. Specifically, they lost users to internet disruptions in Iran and a localized block on WhatsApp in Russia, which kind of tells you they've saturated their accessible markets. Growth is now mostly held hostage by authoritarian regimes.
Okay, so we have tax tricks, internet bans, and a massive hardware shopping spree paid for with layoffs. All right, let's get into the details on where all that capital is actually going.
Yeah, and where that capital is going is actually a pretty massive strategic pivot. I mean, did you happen to notice they almost completely ghosted the word Llama on this call?
I did, yeah, which is weird because Llama has been their whole, their entire open source identity for a solid year.
Right, but now they are heavily pushing this new internal division, Meta Superintelligence Labs, MSL, and they rolled out this new Muse family of models, specifically Muse Spark, which is what is actually powering their mobile assistant right now.
So they are quietly stepping back from the open developer ecosystem and just building a walled consumer brand? Kind of trying to own the ultimate personal agent before Apple or Google completely lock it down?
Exactly. And it is a direct response to things like OpenClaw. You have all these independent open source agents running locally on terminals now. So Zuckerberg knows he cannot just win on the back-end technology anymore. He has to win on the UX.
He actually brought up a very specific quality bar for this. He called it the mom test.
Oh, the quote about not wanting to hand most AI agents to his mother. I loved that. It is such a wonderfully human metric for something so ridiculously technical.
It is, but think about the sheer contradiction in scale here. On one hand, he's bragging about rolling out over 1 gigawatt of custom Broadcom silicon and AMD chips. A gigawatt, and the entire goal of this planetary scale compute is just to make a chatbot simple enough for someone to use without getting frustrated?
It is brute forcing simplicity, which, okay, that actually lines up perfectly with his whole philosophical rant about finding a shirt.
I was hoping you caught that.
How could I not? The industry is constantly obsessing over how AI is going to cure cancer or solve cold fusion. And Zuckerberg gets on the call and says, quote,
Some people care about big, grand things like curing diseases, and a lot of people care about personal things like finding the right shirt for my daughter. He essentially argued society makes progress by individuals pursuing their own aspirations, which is, let's be honest, a very elegant way to philosophically defend an ad tech business.
Yeah, basically. Pursuing your grandest aspirations by clicking a targeted Instagram ad. But it is true. That is exactly what their value optimization suite does. They are taking a trillion parameter model and using it just to figure out how to sell you that exact shirt and maximize their ad revenue.
Yeah, exactly. But the structural question is how they intend to deliver that personal agent long term, because it is clearly not happening in the metaverse anymore. Look at Reality Labs. First quarter revenue was actually down 2% year over year. The Quest headsets are officially dragging the segment down.
Right, but the glasses are offsetting that decline, right?
Significantly. The Ray-Ban AI glasses adoption is apparently off the charts. The CFO explicitly said they are seeing continued strong growth there, which means the hardware portfolio is quietly inverting underneath them.
Wow, so we are shifting away from this giant immersive virtual reality helmet, and we are moving toward just a normal pair of sunglasses whispering Muse Spark into your ear while you walked on the street.
Yep. And they are footing a $140 billion data center bill to make that whisper sound intelligent. $145 billion upper range. Although they did quietly tweak the math in the background to make that pill a little easier to swallow.
Of course they did. What is it, more accounting magic?
Just a useful life extension. They previously stretched the depreciation schedule for servers and network equipment out to 5.5 years. So that structurally saves them roughly $3 billion annually. It just makes the massive hardware spend look a bit gentler on the income statement than the cash flow reality.
Geez, so everything is perfectly optimized top to bottom. The tax lines, the server depreciations, the headcount reductions in May.
Everything serves the silicon.
So if the core app business is actually losing active users due to geopolitics, and they're stretching every accounting lever just to buy gigawatts of AI compute, what does the back half of the year actually look like for them?
It looks like a high wire act. I mean, management is guiding for 58 to 61 billion in second quarter revenue, but the really telling detail is that their total operating expenses for the year are completely unchanged.
Wait, how do you hold your operating budget totally flat when you just bumped your data center plans by $10 billion?
By cutting the human footprint. Zuckerberg was surprisingly direct about it. He actually stated they plan to reduce the employee base in May specifically to offset those massive investments.
So the year of efficiency was never just a temporary phase. It is permanent company doctrine now. They're literally treating payroll as a funding source for Nvidia servers.
Yeah, it is a structural swap. And I think that is the big risk hanging over the rest of the year. You're pushing your capital expenditures to $145 billion, but at the same time, your daily active user growth is getting physically blocked by foreign governments.
Right. Plus, you have the CFO actively warning investors about a, quote, material loss coming from youth safety legal trials in the U.S. this year. There are some heavy storm clouds sitting just outside that immaculate balance sheet.
Mm-hmm. They have built an absolutely incredible cash machine. But when you're stretching accounting levers to fund gigawatts of compute power, your margin for error gets very, very thin. If component pricing escalates further, that perfectly balanced spreadsheet could crack.
So basically, they just need the entire geopolitical and regulatory world to behave perfectly, and they will be totally fine.
Basically. Optimism with a spreadsheet, like we said.
Fair enough. Well, we'll see how deep those May reductions actually go next time. That's our reality check on Meta for this quarter. Thanks for making sense of it with me, Miro.
Always a pleasure. Thanks for tuning in, everyone.
If you want these breakdowns to automatically show up on your phone when big earnings drop, you might want to just hit follow on the podcast. And as a quick, transparent aside, we actually use some AI tools to help us quickly read the massive financial filings so we can focus on finding the real story. We are always looking for feedback or what tickers we should tackle next. So please shoot us a note at earningsunscripted.datamadness.ca or grab the X link right in the show notes.
Catch you next time.